Majority of traders are getting stopped out not because their levels are wrong or because their strategy is bad, but they're getting stopped out because they're entering way too early. They're trusting the wrong signals. They're taking trades too early that Bookmap is screaming at them that they're going to be obvious fake outs. I'm going to show you exactly what those signals look like and what to be doing instead. Let's get into it. If you guys watched my first Bookmap video on what Bookmap actually is, how to read exhaustion, how to read absorption, and how to actually take trades, using Bookmap, this is going to be part 2. Now, if you haven't checked out that video yet, I highly recommend you go watch it because that is the foundation to what I'm going to be talking about today. In part 1, we covered the foundations. In part 2, we're going to be going deeper, specifically how to stop getting stopped out using Bookmap. So let's get into the basic stuff, right? Institutions need liquidity to fill large orders. They can't just market buy 10,000 contracts. It would move price against them. They have worse fills. The spread would be too wide. So they manufacture moves to retail, right, to trigger retail stops and create the liquidity they need. Now, retail stops could literally also be the stop losses from other massive institutions. We saw that so if you're watching this, on the month of May 28th, which today, if you look at May 27th, a trade I took yesterday, I have this posted on my YouTube channel, I'll also link it down below in the description. Great example of a trade recap using this exact kind of theory. But a stop hunt on the long side, right? Price pushes down through support. Retail stop losses are triggered, or people like to call them retail stop losses. I just call it liquidity being taken out. And it's mostly from larger institutions, but retail traders are making up a vast majority of the market now. It used to be around 3%. And at the time you're watching this video or making this video, it's up to like over, it's pretty crazy in my opinion. It's crazy to see how many retail traders have grown. But institutional buy orders fill off that level of liquidity and price reverses hard back up, and every retail stop out institution is going to be equaling the entry fuel. Now, throughout this video, I'm going to be showing you guys some examples of what I'm talking about right now while we have live Bookmap open, just to see how often I'm literally be seeing this almost every single day. Now, a fake breakout, right, on the short side is price pushes up through resistance. Retail breakout buyers chase the move. Price reverses back immediately back down, and you see trap breakout buyers forced to sell. Their selling will accelerate the move down, and every one of these moves is going to leave a footprint, a fingerprint on Bookmap. You just have to know exactly what you're looking at. And if you open up Bookmap for the time being, right, and you just start to watch and you kind of see points of the day where we end up reversing, you'll see something very similar to what I'm going to be explaining about today. You'll see these ranges, right, of liquidity, both at the highs and lows, and you'll see these sweeps, right? Aggressive sweeps above the highs or above the lows, filling some orders right before we get a fast reversal. Now, you can literally be looking at any reversal, any high or low of the day where we actually end up reversing price. And you'll be seeing the same thing. We get these quick, aggressive sweeps, right? Right before price reverse, quick, aggressive sweeps right before price reverse. And you get that fast reversal. The market almost never gives you that clean, low reversal. Usually you can find that in continuations, but when they're kind of major trend, it's always going to be those aggressive sweeps up or down, usually in major liquidity levels. Now, let's continue here on what we are looking at. So, there's 4 fake signals that Bookmap will expose for you, right? The fake signal number 1 is going to be the spoof. It's large passive orders will appear, right? Price will approach and the order disappears before getting hit. And I saw that happen today, actually. I can show you an exact example of that going on today before the actual trade we took, of order being spoofed. So let's go back near the open, which is when I saw this actually happen. Let's go back here to today. So right here, sellers started to move the market down. We had this pretty big buy order that was placed here after the data wick came in. So buyer. As soon as we start to approach that offer, what happens? It gets pulled, and then we continue down into this bigger resting order. So you will see this happen quite frequently, if not almost every single day in the market. Fake signal number 2 is going to be the absorption fail. So it's going to be a passive wall that get hit repeatedly, right? The wall is going to shrink, wall will disappear, and price is going to break through. And the rule is for this is watch if order size is shrinking and getting eaten, not so it's going to be equaling a real breakout if you do see the orders not holding. So basically what a good example of that could be versus absorption and or breakout is, do we see exhaustion to that level out? So as we're coming into like a wave of passive offers here, are we seeing sellers, right, get exhausted, get smaller and smaller multiple times? We're approaching this wave of offer, get indication that we're not going to see absorption, we're not going to fill those offers, and we're going to keep going down. Same thing, see fake absorption is or real absorption in this example, after we fill those offers, after we see absorption, right, from these buyers, do we see more aggressive buyers hopping in? Because if we do, we want to be following the reversal because these aggressive buyers took out these passive offers. So if we see more aggressive buyers, there's nothing stopping them from continuing up versus the exact opposite where we had absorption here, then a lack of aggressive buying that caused the market to then reverse. So it's super important to watch the reactions, the fill, what's actually going on. And fake signal number three is going to be the trap participants, right? Price breaks level immediately and the aggressive buyers flood in. Immediate aggression, selling above, causing the reversal. So the rule is when breakout buyers get trapped, their exit fuel is going to be the reversal in this instance. Now, a good example of this will just be you get an immediate aggressive buyer coming in and breaking that wall. And as soon as you see the aggressive buyer come in and break that wall, you see no follow through, but immediately you get aggressive sellers coming into the market, filling these passive sell offers and holding below price. Fake signal number four is going to be volume with no follow through. And all of these can kind of the same theory, whether it's absorption, trap participants, all can kind of exact same thing if you're looking at it through a different perspective. But fake signal number four is going to be volume with no follow through. So it's massive aggressive selling. There's huge volume, price barely moving or reversing up. And the rule is obvious for this, right? If there's big volume, no movement is going to be absorption. You got to find the passive side, the passive side who's in control, that's holding that move. So if you see massive volume on either side and you see no movement, right? The passive side that's absorbing all that volume, that's not letting that volume break through, that's the side who's going to then end up taking control. And it's a great signal for entry. A spoof. So how you spot the spoof, right? It's basically exactly what I showed you guys. And again, you could just start looking at Bookmap and you'll see the exact same thing happen. The big orders will come. As soon as you start to approach that order, it disappears. And you'll see this happen time after time again because technically it's illegal, but this is how the market ends up working. This is literally how the market works. Happens all the time. Again, if you have enough money to make the market, rules really aren't up to you. You'll see the order literally disappear and you see kind of passing towards it. So you're going to spot massive passive orders that appear suddenly on the tape. Usually these are small time frame orders that haven't been, or on the tape for a long time. The longer the duration of that order that sits on Bookmap, the more likely it is to actually get filled. But it's placed right as price is approaching. A lot of the times that will get placed right as the price is approaching. See if I can find a good example for you guys here. Great example here. You see these three buyers literally put super soon, right as price is approaching down. As price actually gets into that level, they start taking their orders off and it starts to disappear. And again, I didn't even take that long to look for this. I literally just was looking for 30 seconds and I found this. And it oversized. So it's gonna be bigger size compared versus normal order flow. So you can see right here, the darker the red these lines are, right, the more orders are actually sitting there. And it's gonna create the illusions of a support resistance level, but in reality, it can get pulled. So the reaction is super important. Now, how to avoid it is simple, right? You're never going to enter any trades. I never enter any trades just because there's a big order sitting there. I'm going to wait for price to actually reach the level. I'm going to watch if the order actually holds or pulls as price is approaching. Now, it's only valid if contracts are actually being filled. Again, wait for the reaction, wait for the fill. Real orders are sitting for hours and days, right? They hold as price approaches. The contracts are filling and price is going to bounce and respect that level either with a quick reversal or a really breakthrough. Spoofing, right? Just appeared, pulls before price touches. There's zero contracts filled. It's just the market makers doing their thing. And again, spoofs are designed, right, to look convincing. The tell is always the behavior as price approaches, not the size of the order, but how long it's been sitting there and do we actually fill the order. The absorption fails. So you have a passive wall, right? The buyers will hit this wall. The size will then shrink. The wall will disappear and then you will see no resistance. So it's super. This one's actually something you see every day as well. So right here, you see, right, this passive wall, right? Again, this is stuff that I see every day. Like I'm just pulling this to the data I saw today. You see this wall of passive sellers. You see buyers aggressively hitting this wall, right? And it's clearing all those offers, right? Not many more are getting bid in. And we're still seeing, right, a bunch of aggressive buyers, pretty common amount, hop back in after now. So as we fill this wall, right, we see a slight shrink of aggressive buyers, but they keep coming in. We don't actually see lower prices. They keep coming back in time after time again. Another great example here. We have this passive wall, buyers fill, and we see more aggressive buyers above it. No change in aggressive buying, and it keeps holding on. A good signal for absorption, to be honest, is to just wait on exhaustion after you see absorption or wait for leftover or new passive orders coming to the market at the same exact time that are above price or same exact location. Keys that tell you absorption is failing. So this passive order book size visibly shrinking with each hit. So we're taking all those orders off, but not making them move down. No new passive seller stepping in to replace those offers as we're filling them all. And then aggressive buying staying consistent or getting larger. What real absorption will look like is the passive wall is going to hold, right, across multiple attempts of tests. It's not going to go anywhere. New orders are going to get bid in. An aggressive side gradually loses steam, which is just basically exhaustion. Price will consolidate, then will eject very. And I want you guys to cherry pick these triggers, man, because you see them quite often, right? But seeing them with good R&R, seeing them with a good market structure on your side, that's what's super, super, and make sure everything is as clear as it possibly can be. The fake breakout with the trapped players. So the next thing is looking at the fake breakout with the trapped participant. So the phase one will be the breakout. Price is going to clear a key level, green bubbles everywhere. Say if this is a buy side, and retail traders are going to chase the long. This is what I love using trap participants in this exact setup. So the phase two will be the trap. Immediately above the level, aggressive selling prints, so just big red bubbles, start, right? And price is going to stall for a little bit. These are shorts loading into the market. And then phase three is the reversal. So price can't follow through. Trap longs are underwater, right? They sell to get out. And then that selling pressure coming back in plus the original entry will cause the move, right? The trap sellers accelerate the drop, clean short entry for those who actually are able to read it. So the reaction, man, is super, super key. Let me draw this up to you, right? We have, maybe order sitting in the market right here. Price moves up, right? Breaks this level, and we see aggressive buyers printing, aggressive buyers, aggressive. Instantly, right? We start to stall. And during that stall, we see aggressive sellers hopping into the market. They hop in, price stalls, and then instantly we see a drop, right? Maybe coming down back below this level. This is what causes those longs that got up here to get stopped out. And that then further moves a bigger move down. And if you can read this trap participation right here, it's a very good indication that the market is going to reverse. And it's a really, really good entry trigger in my personal opinion. And on Bookmap, aggressive lane prints appear immediately above the breakout level. So it's almost like that. They break out, massive buyers are present or not present. Sometimes it's just, small, big buyers above that key level, then sellers appear instantly. Large passive buyers absorbed underneath, and price fails to make new highs. This combination equals trap players, and it equals for you, and it's telling you, it's screaming at you to fade the breakout. Now, I want you guys to ask yourself these three questions before every entry you take, right? Is it real? Or is it a spoof? How long has the order been sitting there, right? Just for a while? Did it just appear? Is it holding as price approaches or just starting to pull? Is it long-term resting orders? Is it, real long-term? Is it or is it appear and pull and you can see it happening throughout the whole session equals spoofs? Is it dying out or gaining strength? So is the aggressive side getting smaller as it approaches a level, or is aggression accelerating, right? Dying out equals a likely reversal. Accelerating equals a level in danger of breaking. Is there any follow through? What is the reaction? What is the follow through? So, did the opposite side step in to confirm? Wait for confirmation. Don't worry about getting later exit or later entry. Drop your size, right? Wait for the fill, wait for the reaction. You're going to be reacting every single time, never predicting, man. If you can answer all three of these before every entry, your fake out rate drops dramatically, guys. And this is what I cover live with my students every single day. And currently, the live mentorship where I do one-on-one calls, I live trade every single day. It's currently full. If you guys want access to it, make sure you join the waitlist down below. It's first come, first serve basis. Bookmap is going to confirm everything. It's not going to replace your analysis. And Bookmap at random location is going to just be noise, right? Bookmap at a key level with structure, that's your edge, not just random location. You got to analyze the structure, mark out your key levels, set your bias, and then you open Bookmap and you're looking for your entry triggers. Context is always going to win. The market's always trying to tell you a story, right? Your job is to read that story and interpret it. Bookmap is the last piece of the puzzle, not the first one. These are the rules I want you guys to use on how to stop getting faked out. Never trust a spoof, right? Only enter when orders are actually getting filled. Watch the passive wall size. So if it's getting eaten, it's not holding, right? A shrinking wall is a warning sign. Number three is fake breakouts are going to create trap participants. Read them and trade from the other side. Always just wait for their reactions. The best advice I could give you. Number four, massive volume, right? No follow through is going to equal absorption. Find the passive side and you trade with that passive participant after you see the absorption. Ask the three questions before every single entry. Is it real? Is it dying out? Was there follow through? All three must check and you're good to actually enter your trade. Again, context first always. Bookmap is going to confirm. It's not going to replace your structural analysis ever. So make sure you guys check out that first video if you haven't yet, how to use Bookmap. It's just the basics. Part two is this video where you are right now. And part three is coming soon, how to read absorption, knowing when the level will hold or break. Drop in pretty much next week, guys. I hope you liked this video. Make sure you leave a comment down below if you have any questions and subscribe if you want to see more. If you're a returning subscriber, welcome back. If you're new, welcome in, guys. See you in the next one. Peace out.